an elegant dining table for entertaining friends. All just minutes from the best nightlife in Tokyo. Mori Serviced Apartments. Home sweet home.
China's Yangtze Power says that profit last year more than doubled as sales surged. Full-year net income rose to 3 billion yuan or $365 million US dollars. China is the world's largest electricity market after the United States. It's been battling a power crunch that has forced factory shutdowns and other emergency measures around the country. Joining us with more on China's rising thirst for energy is Philip Chan. He is research director with Shenwan Wangguo Securities, and he's joining us live from our Hong Kong studios. Philip, great to see you. Thanks for coming on.
Hi.
So what did you think of the numbers? What did you think of the numbers? The numbers were very strong for Yangtze. What did you think?
Yeah, they were strong, but for our team, and I think the market consensus was pretty much in line. So we don't expect too much, too much excitement for the time being in the share price going forward. We expect the company to be a reasonably good performer, both on operation and share price during this year as well.
Obviously, a lot of focus on demand in China just because we have had such a crisis in China, as we had outlined in the introduction. What are your expectations for this company and other companies in China?
Yeah, well, the Yangtze Power is a hydroelectric power company, so it's also the largest of this type that's listed. The other ones are pretty small, so we don't expect that there will be much focus on the other ones. As for the coal-fired companies, which make up the majority of the rest, generally speaking, the sector is deemed to be, it's going to have another good year, after a bumper year in 2004. But obviously the profitability it's going to grow. The profitability is going to be good for all these companies, but the rate of growth is going to slow down, mainly because of the recent hikes in coal prices, which is going to affect the operations for these companies, and also the fact that most of the coal-fired companies are have been running at full steam anyway. So big increases now in terms of capacity utilization are not there. Not going to be there. It's going to be more down to organic or acquisition growth.
Sorry to jump in. What about just taking this a little bit broader? Obviously, China has really been pushing to find power sources outside of the country, going all over the world. What are your expectations on how that will impact the bottom line for current power plays already in China?
Well, I don't think it's going to affect the companies, the traditional coal-fired ones this year, and actually, I don't really expect they're going to be affected to any great extent for the coming few years. China has a nuclear program which they want to introduce on a soft basis next year. Probably the nuclear side won't pick up until the late. Maybe getting towards 2009, 2010. So I don't expect it's going to affect the traditional coal-fired power plants yet.
All right, Philip Chan, thanks so much for making the effort and coming into our studios. Great to talk to you.
Hi.
Philip Chan is with Shenwan Wangguo in Hong Kong. And we're going to take a break here on Rapid. Coming up, we'll run you through the top stories from Australia.